Traders, FX Pip Collector here. Today is Saturday, July 20th, and I'm going to be analyzing everything from the S&P 500 all the way up to the Euro US dollar. This is the video I like to do on Saturdays where we cover the daily roadmap time frame. Like I always say, if you do not understand what's going on your roadmap time frame, then you're going to not really have much of a clue on what you should be doing on the shorter time frames looking for entries. It's kind of like if I dropped you off in a country where you didn't speak the language, you didn't have a cell phone, you didn't have a map, you'd be completely lost. Same thing with trading. If you do not understand your roadmap time frame, then you're going to be completely lost and not have a clue what to do on your shorter time frames. So yeah, we're going to start off with the S&P 500, work our way all the way up to the Euro US dollar. We're going to cover everything from the S&P, natural gas, oil, gold, silver, and basically every single major Forex pair. Now, I do have a membership program if anybody is interested. It is only $30 a month. It's very, very, very cheap. You can cancel it at any time. It comes with a trading course, which is about 35 videos. And I like to call it Learn and Earn at the same time because the whole point of my membership is to teach you to trade. But hopefully while you're learning to trade by attending my daily Zoom meetings that I do for the London session and the New York session every single weekday. Hopefully by attending those meetings and taking my trading course. But while you're learning to trade, hopefully you can earn by following along with some of my swing trades. I do provide all the swing trades that I take to the group at the time of entry with stop loss. So definitely if anybody's interested, definitely try it out. You can cancel at any time if you're not happy, but I think for $30 a month, you're definitely going to be very, very satisfied with the membership. Now, like I said, I do provide all the trades to the group at the time of entry. These are the trades that I provided to the group last week. I am a swing trader, so it's not like I'm going to be providing all kinds of trades every single day. I probably average between, I don't know, maybe 10 to 15 trades a week. So these are the trades that I provided to the group last week with stop loss. So if anybody's interested, these are some of the things that you're going to be getting. So definitely check that out. If you want to pause the video and take a closer look at some of these trades, you can see my entry price, my stop loss, and I do take profit on a partial part of my position in order to become risk-free on the rest of the trade. So definitely check that out if you're interested. It is very, very cheap. It's only $30 a month. It's a very, very good deal. There's a lot of people in the membership that say that they pay me $30 a month, and they're making $2, $3, $4,000 a month on their prop firm trading account, following along with my trade setups. So definitely check it out. It's definitely worth at least giving it a chance, especially at $30 a month. So let's start off at the bottom of the list and then work our way up towards the more popular pairs like the dollar pairs. So anyways, the S&P 500 definitely did make a very strong turn to the downside this previous week, right at the 138% Fibonacci level. Now, we don't really necessarily have a very confirmation that this is going down in a big way. We do have a breaker structure right here, but the only thing that breaker structure right here tells me is that this last wave is over. It definitely does not tell me that this thing is going down in a big way. So until it actually goes out and breaks below this structure right here, I'm still looking at this move down as possibly a correction to this move up. I would definitely keep an eye on this 78%. If it respects that level, makes it a golfing move up, I would definitely go long. If it doesn't respect that level, but instead goes down and breaks structure, then that definitely would turn me into a seller longer term. I still think it's going to be a correction, but maybe it's going to stretch out into something like this, which lasts a few weeks. And you definitely don't want to be waiting for long opportunities for a couple weeks, so you could be going short on shorter time frames. Moving on to natural gas. Boy, natural gas has been very, very strong to the downside over the last few weeks. I was originally thinking this move up was going to be either a wave A or a wave 1, but the fact that it didn't take out structure on the weekly time frame tells me it's probably not a wave A and probably not a wave 1. I think that at this point it's probably more likely this is going to keep on going down and probably retest these lows. I personally am definitely looking for short entries at the end of pullbacks on shorter time frames. So moving on to oil. I definitely am looking for an entry on oil. I thought maybe on Friday this was an entry right here. I mean, it definitely didn't respect a fib level. It kind of missed it. But actually, now that it's going down again, I think it's still very clear that this is a 1. I think we're still in a wave 2. This first push down is probably the A. There's little 3 waves right there in the middle is probably the B. And now we're probably in the wave C. I would keep a very close eye on the 50% and the 61%. If you can identify the end of a trend for this wave C on shorter time frames, you should be able to identify the end of this correction, end of a wave 2, and beginning of a wave 3. My overall target for the move up on like the monthly, weekly time frame is right around $100 a barrel. So moving on to silver. Silver is another one where originally I thought the correction perhaps could be over, but then once the market made 1, 2, 3 waves up, it was pretty clear that this was 1, 2, 3, 4, 5 waves down, wave A, 3 waves up, wave B. Now we're probably in a 1, 2, 3, 4, 5 of wave C. I would expect this to go down to about the 27.8 area, someplace in that range to finish off this wave C before it actually does continue back up for the continuation of the uptrend. Now, gold is another one where I was pretty convinced that the correction was already over, and now I'm starting to second guess that a little bit. If it does break structure right here, I think that's going to confirm that this is 1, 2, 3, 4, 5 waves down wave A, and that this is actually a wave A, this is actually 3 waves for a wave B, and this is actually a uptrend for a wave C. If that is the case, then this would be an A, B, C, or B, and if it does break structure, it's going to pretty much confirm to me that it is going to go down, probably take out all these lows for a wave C, and that would probably still be a wave 4, but it's still just going to stretch out into a much bigger wave 4. Now, none of this is even confirmed until we actually get a break of structure, which it looks like it probably is going to do. If it actually rejects this structure, I would definitely still be looking for longs. Like I said, the only thing that really confirms that analysis is this break of structure, and we definitely don't have it yet. So since we don't have it yet, I would definitely still primarily be looking for longs on shorter time frames until we do get the break of structure. So moving on to the CAD Swiss, definitely looking for shorts on the CAD Swiss. I mean, it is extremely clear this is a 1, 2, 3 right here. If anything, we're probably just in a wave 4, and then we're probably going to almost definitely have more movements to the downside. So I'm definitely looking to get short on this, probably at the end of a wave 4, probably for a wave 5. So definitely looking for another short on that this coming up week. Moving on to the Kiwi Swiss. Kiwi Swiss is either in this first push down is either a wave A or a wave 1. This move up right here is either a wave B or a wave 2. If this right here is really the end of a wave Y, then this is actually definitely a 1, 2, and we're currently in a wave 3. If for whatever reason this is a wave C, then it will definitely tell us it's a wave C by bouncing off an appropriate Fibonacci level, breaking structure to the upside, and probably continuing the uptrend. If it really is a wave 3, it's going to tell us it's a wave 3 by not breaking structure, but instead making lower lows, lower highs. Either scenario, as of right now, it's not too important to know because right now we're just looking for shorts on shorter time frames until our roadmap time frame gives us evidence one way or the other. Moving down to the Kiwi CAD. I think the Kiwi CAD is very likely in a correction to this last push up. I am paying very close attention to these fib levels. Really, it's not going to be confirmed to be over until it goes up and breaks structure, and if it never does go up and break structure, then you can just keep on looking for shorts. While you're looking for shorts right now, right, because you really shouldn't switch up until longs until you see confirmation that the correction is over. So while you're looking for shorts, if it just keeps on pushing down, then whatever, you're looking for shorts anyways, right? Until you do get that nice clean break of structure at a Fibonacci level. Moving on to the Kiwi CAD. The Kiwi CAD tried to break structure this week. It definitely did break structure, but it rejected structure. Normally when you see a rejection of structure like that, that normally does mean that the trend's not over, and it probably will keep on going. Since it rejected structure, I'm definitely still looking for longs. I still suspect that this is a 1, 2, and a wave 3. If it's a wave 3, then we have lots more upside potential, and I'm definitely going to continue to look for longs on shorter time frames. Moving on to the Aussie Swiss. The Aussie Swiss, I was definitely originally thinking that it already ended a correction down here, so I'm definitely paying very close attention to these last two Fibonacci levels. If price does, respect one of these levels, go up, break structure, I definitely would take it as a long. I do suspect this right here is the end of a correction, which means that this should make a higher low. It should respect one of these two fib levels, and it should actually end up continuing the uptrend. Until it's actually proven to be over, you should probably be looking for shorts because it definitely could stretch out to the 78% and maybe even a little bit bit lower. So just go with the flow, take it one step at a time. The Aussie CAD is also trying to break structure. It definitely has not done so yet. So if it rejects structure, then I would definitely continue to look for longs. I am definitely looking for longs right now. But if it does, next week break and hold below structure, then I would definitely stop looking for longs and I would definitely start looking for shorts. If it does break structure, it may be an indication of a much, much bigger move to the downside. And we definitely want to be looking for shorts if that is the case. Moving on to the pound Kiwi, we in one of our live Zoom meetings that I do with my members, we spent quite a bit of time on the pound Aussie, pound Kiwi, Yo Aussie, Yo Kiwi crosses, and I think that we came up with a pretty confident analysis that on the weekly, monthly time frame that this is almost definitely going up longer term. Now that doesn't mean that there won't be some pullbacks along the way. That's definitely going to be pullbacks along the way. Whether it does a pullback now or whether it does one later doesn't really matter to me, because either scenario, I'm definitely looking for longs on sort of time frames. Like I said, I wouldn't be surprised if it did, go down, break structure, but even if it does break structure, it's almost definitely going to be just another correction to the uptrend. If it doesn't break structure, then just enjoy the trend. Don't worry about trying to identify the end of the trend, but instead worry about trying to get in every single pullback you see on sort of time frames. Moving on to the pound Aussie, like I said, the pound Aussie, pound Kiwi, Yo Aussie, Yo Kiwi are all extremely correlated, and I think that we came up with an analysis that has these things going up for a very long time, so that tells me that I am definitely looking for longs. My most recent structure level is right here. If it breaks that structure, you can start looking for shorts. Otherwise, I am definitely looking for longs every chance I get on shorter time frames. So moving on to the pound Swiss. The pound Swiss is also another one where I'm actually waiting for a possible move to the upside. We don't really have a break of structure yet, and I actually think there's a good chance that it may not break structure. It may actually keep on going up. I actually think this could even be like a big old expanding flat right here. So like that would be like a wave 1. This would be an expanding flat wave 2, and eventually it goes up for a wave 3. If it breaks and holds below structure, then yeah, definitely start looking for shorts. If not, then definitely keep looking for longs on shorter time frames. Moving on to the pound CAD. The pound CAD is also trying to break structure, but since it has not broken structure, I would definitely still be looking for longs. I still think that this has a lot of upside potential on the weekly, monthly time frame. If it breaks and holds below structure, then okay, start looking for shorts. If it doesn't break and hold below structure, I would definitely go long every chance I got on the shorter time frames. Moving on to the Euro Kiwi, like I said, the pound Kiwi is very correlated, the pound Aussie is very correlated, and the Euro Aussie are very correlated. I think all four of those pairs are in an uptrend on the weekly, monthly time frame, and the fact that we're closing above the 78% is another really good clue that it is going to take out these highs most likely, and probably continue to make the higher high, higher low series on the daily time frame, which is great news for us because that should give us lots of opportunities to go long at the end of pullbacks. Moving on to the Euro Aussie. The Euro Aussie is actually quite weak compared to the other ones, but I mean, it definitely does have a breaker structure. It definitely is trending up. I have my Fibonacci retracement out here just to keep an eye out for areas of resistance. Those Fibonacci levels are definitely areas of resistance, whether it turns there or not. So right now, I am definitely looking for longs at the end of every pullback I see. Moving on to the Euro Pound. The Euro Pound did break structure this week, and that's pretty significant because it definitely looks like a 1, 2, 3, 4, 5 waves down. So with this break of structure, there's really only two options. Option number one is we're probably making that we could make a correction to the whole move down, the whole 5 waves down, make some sort of an ABC correction and then continue the downtrend. Option number two is that maybe this really is like the end of a wave C or something on the higher time phase, and that it's just going to keep on trending up, and it's a complete trend reversal. Whether it's option number one or whether it's an option number two, it definitely should lead to some pretty good long opportunities, especially over the next few weeks on shorter time frames. Moving on to the Euro Swiss, this is another one where I suspect this is a wave 1. I suspect this is an expanding flat wave 2. I'm keeping a very close eye on these Fibonacci levels. I don't know which one it's going to turn at, but I do know that when it does turn, we should be able to recognize it as the end of a correction and the continuation of the uptrend for this wave 3. So keeping a very close eye on that. Moving on to the EuroCAD. The EuroCAD is another one that is definitely in an uptrend. We are at the 100% Fibonacci extension, which may be an area of resistance, may cause a bigger pullback, but unless it breaks structure, I am definitely doing nothing but looking for longs, and it might just keep on stretching out. The trend is your friend 100%. So moving on to the yen pairs, I always group the yen pairs together. One of the reasons why I think the yen pairs are actually one of the easier currencies to trade is because they are so correlated. All seven of these pairs are doing almost exactly the same thing, just different versions of it, because one will be a little stronger than the other. So I do kind of cruise through these yen pairs very fast because the strategy for me is exactly the same on every single one of them, and they're all so correlated that they're actually a little bit easier to trade, in my opinion. The Swiss yen, I mean, if it does break and hold above this structure, you could start looking for longs, but I would expect this to at least make some sort of a three-way pullback. I still think there's a good chance that these yen pairs are going to go up at some point when they're ready, and I still think there's a pretty good chance this could end up making some sort of an ABC correction on the higher time frames. Moving on to the CAD yen, definitely very strong move to the downside, just like the other pairs. I do kind of suspect that this could turn into like a big old ABC correction, and I do suspect that this could end up continuing back up. But I do think that there's a good chance this ABC correction could last several weeks and probably give us lots of opportunities to go short. So, like I said, it's pretty much the same story on all these yen pairs. I suspect that it's going to end up doing something like this, but we are definitely looking for shorts on shorter time frames. So, I mean, if it does just keep on stretching out, that is definitely not going to be a problem for me. Every single one of these yen pairs, I kind of expect to do something like this. So I do kind of cruise through these yen pairs kind of fast. The pound yen to me is actually one of the ones where it still looks to me like it could be a wave 4. I would keep a very, very close eye on these fib levels. It actually could because of how strong the pound has been. It definitely could be a 1, 2, 3, 4, 5. So keep a very close eye on your Fibonacci levels. These yen pairs could continue the uptrend at any time. The euro yen and the pound yen especially because they're actually still very strong. The euro yen never did touch the Fibonacci level either, which also kind of makes me think that there's a very good chance that it will continue up. But for now, I am definitely looking for shorts on every single yen pair, including the dollar yen, until I get more confirmation that we're back into the uptrend. So dollar yen, same thing. I mean, the dollar yen to me definitely looks like 1, 2, 3, 4, 5 waves down. I think it's likely a wave A, but it could also possibly be some sort of a running flat or an expanding flat. If we do get a break of structure to the upside, I definitely would start looking for longs again. If not, I would definitely continue to look for shorts on all the yen pairs until we get that Fibonacci bounce break of structure, and especially until we get that three-way pullback completion. Moving on to the dollar Swiss. Just like the other Swiss pairs, I do think this could possibly go up at some point. To me, it kind of looks like a 1, 2, 3 now, so I do suspect this move up is very likely going to be a correction, and I think that we're very likely going to get at least another push down. The trend is definitely down, and I'm definitely still looking for shorts on shorter time frames. Moving on to the dollar CAD, I think the dollar CAD is actually making an ABCDE. This thing has been sideways for more than 2 months now. Normally, when I see something so sideways, I actually kind of don't even bother with it because I'm a trend trader and I'm not a big fan of sideways markets. Some people thrive in these sideways markets. I definitely do prefer to just leave them alone. I still think there's a wave 1 here. I still think there's an ABCDE of wave 2. At this point, it's probably going to go up and touch the top of this channel, but I still think at some point it is definitely almost going to go down for a wave 3. So I am for sure keeping an eye on that. The Kiwi dollar, I still think that all these dollar pairs are in a correction. I still think that this is actually a wave A. I think there is a three-way pattern there for a B, and I think we're in a 1, 2, 3 of C. I would keep a very close eye on the 78 and the 61.8 Fibonacci levels. One of those two levels, I think this is going to make a double bottom, make a break of structure, and continue the uptrend. I still suspect this to be a wave 1. I still suspect this to be a wave 2, and I still think it's going to go up for a wave 3 when it's ready. So let's move on to the Aussie dollar, the pound dollar, and the euro dollar. But before I do, definitely, like I said, I want to mention one more time, I definitely think you should at least give it a chance. Just learn and earn. Because like I said, hopefully while you're learning to trade, you can earn by following along with some of my swing trades. And it is only $30 a month. It's probably one of the cheapest, membership programs you're going to find like this. And you can cancel at any time. There's no commitment or anything like that. A lot of traders that do what I do charge thousands of dollars for their trading course. course. My trading course comes free with the membership. So, like I said, the main purpose is I want you to learn to trade by attending these Zoom meetings and watching my trading course. But while you're learning to trade, I have the hopes that you're going to earn while you learn by following along with some of my swing trade setups. Just be aware that I am 100% not a scalper. You're never, ever, ever going to find me looking at the 1 minute, 5 minute, 7 minute, probably not even the 15-minute time frames. I am not a scalper. A lot of people do join my membership and think that I'm a scalper, so I just need to make it clear to everybody that I am definitely not a scalper. I'm actually more of a swing trader than anything, which I think is actually way more appropriate for the majority of people. My old mentor, the one that actually taught me to trade, used to say to us that scalping strategies were invented by the brokers to bleed your trading accounts to death, which I truly, truly do believe. Now, don't get me wrong, there are definitely people that can scalp and make very, very good money at it, but I think the percentage of people that are able to be consistent with scalping is extremely low compared to people that try to swing trade and day trade. So anyways, let's move on to the Aussie dollar. Aussie dollar definitely made a very significant move to the downside, and I mean, I do see a possibility of this being a double three pattern. If it is a double three pattern, this actually could maybe even go all the way down, take out these lows. I still kind of doubt that, though. I mean, I think if anything, it might be like a wave A, a wave B, and it might be a running flat. If it's a running flat, then it would actually make a higher low, and then continue the uptrend. I'm still very bullish overall, but I do believe that right now we should be looking for shorts on sort of time frames because the daily time frame is definitely down, but I would 100% keep an eye on these Fibonacci levels, especially if we get that double bottom break of structure. That would definitely be the end of a correction for me and continuation of the uptrend, but until that happens, I think we should be looking for shorts on shorter time frames. Moving on to the pound dollar also did break structure, as you can see. So most likely what we're seeing now is we're going to see a correction to the last wave up. I think what's going to happen is this is going to make an ABC correction and then later on continue the uptrend. But there is definitely a chance that this is just going to make a small correction, touch the 38% and just keep on trending up. Now that we have a break of structure on the daily, I definitely would be looking for shorts, but I would keep in mind that one of these Fibonacci levels very easily will end the correction and continue the uptrend. Just the question is whether it makes like a big ABC like this and continues up, or whether there's already a little ABC in here and it just continues up from there. Either way, when it does end the correction, I definitely think we'll be able to recognize it because we do have the skills to identify the end of a trend. And if you can identify the end of a trend for the wave C, then you've also very likely identified the end of a correction. So moving on to the euro dollar. The euro dollar has not broken structure yet, but looking at all the other dollar pairs, it probably is going to end up breaking structure. We'll find out. I think there's a chance that it might make a higher low. I actually do think there's a pretty good chance it will, especially because we're not bouncing off a fib level. But if it does decide to break structure, then I would definitely throw your Fibonacci retracement on there, and I would definitely watch your fib levels. If it doesn't break structure, but instead makes a higher low on sort of time frames, I would definitely 100% continue to look for longs every single chance I get. The trend is your friend, and if this really is a wave 1, a wave 2, and a wave 3 like I've been talking about, then this thing is going to continue to trend probably pretty much all year long, making higher highs, higher lows on these daily, weekly time frames. So definitely don't forget to check out my free Discord channel also. My Discord channel is 100% free, and I do giveaways at the end of the month on every single one of at the end of my month on my Discord channel. I'm actually doing 2 giveaways this month. I'm doing 2 USDT giveaways this month. So in order to enter for a chance to win this giveaway, all you had to do is be a free member of the group, and anybody can win, whether you're a free member or a paying member. Everybody has exactly the same chance of winning. So definitely join my Discord community. We currently have 5,265 members. It's a very active community. It's 100% free to join. You do not have to pay a dime if you do not want to. A lot of people share their trade ideas. A lot of people post their charts. I really want to build a community of like-minded traders that are willing to help each other out. Trading is a business that I think teamwork definitely makes for dream work. Like Napoleon Hill says, It takes a mastermind group to be successful at anything, which is why I think it's so important to be part of a community of like-minded traders. You can join my community 100% for free. It's just you're not going to get any access to my daily Zoom meetings, and you're not going to get access to my swing trade setups or my trading course. But if you don't care about any of that, then definitely join my trading community. It's 100% free. The link for that is in the chats and in the description. So I hope that you enjoy the rest of your weekend. And as always, thank you and happy trading to everyone.